Okay, for aging of accounts receivable, we can look at this table here in front, and you will notice that we have categories, and these pertain to the number of days wherein a certain amount of accounts receivable has already been past due. And here in this third column, you can see that the values are increasing. So if we have a higher value here, this indicates that there is a higher chance for your client not to pay you. So here we have 5% for this portion here, which has already been past due for 121 days and above. So to go about this, the first step would be to multiply the amount by the percentage of uncollectibles. So that's 50,000 times 0.1%. That will give you 50 pesos. And then we do the same thing for the second row, 40,000 times 0.2%. We get 80 pesos. 30,000 pesos times 0.3% will give you 90 pesos. 20,000 times 0.5%, that will be 100. And 10,000 times 5% will give you 500. And then what we'll do is, these are the estimates. We will add all of them and we'll get 820. Now this 820 indicates that this should be the final value for the allowance for bad debts during the period. This 820 will be the amount that will be reported in the balance sheet. Now here we notice that there is already an existing value of 500 in your allowance for bad debts, meaning this was derived from the previous period. So given that, to know the estimation of bad debts expense and the increase of allowance for bad debts during the period, or this period, what we will do is subtract 820 from 500. And we will get 320. So this means, in your journal, when you prepare the journal, it would look like this. We debit bad debts expense, 320. This will go straight to your income statement. And then we credit allowance for bad debts, 320, which will increase the value of your allowance for bad debts by 320, giving you an ending value of 820. And that's it. That's chapter 8. And in the next video, we will talk about plant assets. But for now, kindly review this slide and answer the homework I uploaded on Schoology. So, good luck!